3 or 4 vehicles have been in my business name. How they structure the paperwork, because if they don't do it right, you'll finance the car thinking it's in your business name. 30, 45 days later, it's popping up on your personal credit also. You're pre-revenue, you don't have the data, you don't have tax returns, you do have a filed business, you're set up 3-6 months, but you do have good personal credit. There's a huge opportunity still for you.
I feel like the most often time they're asking those questions when it's too late.
Yeah.
All right, so Mark, I am interested in understanding at what stages do you start to see when clients should evaluate the need to take on debt? Because I feel like the most often time they're asking those questions when it's too late.
Yeah. Whenever there's an opportunity to expand and grow, whether that's bring on employees, whether that's equipment, whether that is you're in a position to where you don't want to use too much liquid cash that you have, or there's not enough cash. I recommend, or most people come to me when those are some of the challenges, or those are some of the walls they run into. They can't facilitate that challenge or that problem with the immediate tools in front of them or with the money that they have readily available. So then they're reaching out saying, hey, I'm trying to get a piece of equipment. I need equipment finance. I need a bridge loan. I need some gap financing. In the startup stages, I'm pre-revenue, so I really don't have a lot of revenue, but I need to be able to tap into some OPM, other people's money, to kind of kickstart or get me going, or to look a little bit bigger than they are for certain situations. So those are some of the most recent scenarios that people usually come to me, hit my website or DM me because they're in a position end of the year, or they're trying to finance some big equipment to try to write it off to offset their ordinary income for different reasons. So I would say those are some of the most relevant reasons people reach out to me when they're looking for accessing capital.
So when a business first starts out, one of the questions I always get is, how do I build business credit?
Ooh.
And I don't know, that's the word to me sounds a little cliche, and you hear all these things out there about trade lines and stuff. But when a business, what does business credit really entail? And what are some of the first things that a company that's just starting out, what should they do in order to even start that process?
So I'm definitely glad you asked. So business credit is a real thing. It is a leverageable tool also, just like your personal credit. Structure makes a huge difference. NAICS code, the industry that you're in, makes a huge difference. So the first form of business credit or bank data rating is opening up a business checking account. That's the first thing a business needs to do. I don't know if you've seen it, but I see too many businesses that don't have a business checking account. They're operating as a sole prop or out of their personal checking account. So the first form of data that's being reported, that's being grabbed from anywhere, is that business checking account. Then they can go into, depending on the industry that they're in, they could look at vendor accounts. Vendor accounts are net 30s, net 60, net 90 accounts. And then from there, they can graduate to tier 2, tier 3 accounts. Now we're talking, again, these are all industry specific. Depending on what they're in, you have Lowe's, you have Sam's Club, you have Home Depot, you have certain vehicle financing. I try to figure out what business you're in that determines the path or the runway for business credit. Because sometimes you can be in an industry or a business that a lot of the things that I named don't benefit you, but they can help build your business credit. Because when lenders look at business credit, they're looking at Experian Business is a major one. It's probably the most widely ran or used data consortium for business credit. Equifax Commercial is the next one. Dun Bradstreet is probably your most popular, but it's not for cash or credit lending per se. When it comes to loans, it's more vendor credit. You also have Credit Safe, and you have what's called SBFE, Small Business Financial Exchange. Again, depending on the business you're in and the type of debt you take on to build that business credit is going to determine which business credit bureau your account is being reported to. So I usually come in and figure out, again, what's the game plan, what business you're in, what are you trying to accomplish. That way I can better facilitate or help you. So say for instance, I have someone in real estate. They might do fix and flips. So they're going to want to build business credit around having vendors that they can get supplies from. Home Depot, Floor and Decor, Lowe's, Wayfair. I have people that are in a short-term rental, so Wayfair or Menards or Costco. Places where they can get furniture or things on credit. And so when it comes to building business credit, I'm also a data furnisher. So I also report to these business credit bureaus. So I have a process that expedites that tremendously. So if a client comes to me and saying, hey, they need to build business credit, it's usually a 90 to 120-day process. But when they come through me and my software that I've helped build and develop, it's about a 45 to 60-day process to build sustainable, leverageable business credit.
Wow. I was just thinking of a myth, right? So the myth is when you get business credit, it's first based off of your personal credit. Is that true?
No, it's not. So when it comes to being able to get cash credit from business credit, it is. You do need to be what's called a PG, a personal guarantor. So until the business can stand on its own 2 feet, meaning it has the things that you provide, the tax returns, the P&Ls, the bank rating, the bank revenue, all these things, if it doesn't have that and you're trying to get a line of credit or a credit card under the business, usually less than 2 years, you're going to have to personally guarantee it. But if you have $30,000-$40,000 in revenue coming in, you have tax returns, you have these things that can hold a conversation in addition to, with you or for you, then it's less requirement of your personal credit. Now it's more of the business being able to have a conversation because it has the data. But when it doesn't have the data, somebody has to speak, and it's usually you, the personal guarantor.
That's very true. Another question I had was, how do I even know what my business credit looks like? I mean, am I able to go out and pull a business report?
I tell people to pull a smart business credit report. Experian offers smart business credit reports. You can pay a one-time $49 and get your business credit report comprehensive one time, or you can do the subscription. It's $190 for the year, and you get alerts just like on your personal Experian report. You can make changes. You can look at inquiries. You can update your financials. You can also change addresses or subcodes. You can do a lot more with the subscription. Wow. So Experian does offer an opportunity for businesses to see and monitor their business credit report. NAV also offers a free one, but Experian Business offers a more comprehensive one.
Wow. I have another question. I often get asked by clients about wanting to purchase vehicles
in the business.
So talk a little bit about that.
That's one of my favorite things. Is my last 3 or 4 vehicles have been in my business name, and it is something you're able to do. Again, structure, education, and being set up the right way. You have banks like Ally Financial, BMW Financial, Mercedes-Benz. Most of them, Toyota, offer some type of commercial or fleet financing. Knowing how you need to build out your business credit in small tiers first to have something reporting there is the first step. And then understanding what type of vehicle you're looking for, and then reaching out either to a fleet manager, having a conversation, because you're not talking to the regular salesperson. You want to talk to a fleet manager or a fleet salesperson. And then you're setting up what's called a fleet line of credit. FMC, Ford Motor Credit, offers that. GMC offers that. And that's where we educate, and we've created content and education information for those business owners that are trying to get a vehicle in their business name, equipment in the business name. Again, you can also get them where one of my vehicles, it's completely in my business credit. Ford, if you're 2 years in business and you have some type of business credit on your business credit report, they'll extend you terms under just the business by itself. Wow. And GMC does it also, and BMW is another one of my favorites.
Wow. Well, I don't know if you know, but that car loan interest is also available to businesses
to deduct it.
to deduct the car loan
Okay.
interest as long as the car is manufactured. I'm really glad you specified that too, because I leased my vehicle,
Hmm.
right? But the name of the lease shows my business name, but I
Yeah.
did not go through a fleet
Manager.
manager.
Yeah.
And so that could have been one of the reasons why most of the paperwork was still requiring my signature.
Yeah.
And even though the
But
title,
did it show up on your credit?
I don't know. Now I'm gonna check.
Yeah.
I mean, literally.
So it's usually the leasing and the lessor. Like leases are a little bit easier, but it is how that F&I manager or the person did the paperwork, how they structured the paperwork. Because if they don't do it right, you'll finance the car thinking it's in your business name. 30, 45 days later, it's popping up on your personal credit also.
I'm going
And a
to.
lot of people, me personally, I try to eliminate that. I want it all in the business name.
Yes, I would agree, because I have, I'm very specific with the separating out my business credit cards. And to your point, they don't show up on my personal.
Yeah.
But now that I know how to go out and pull my business credit report,
Yeah.
that is going to be my
And
first
it's
assignment.
important if I'm really working with someone or building out a game plan or building their business credit or going through a funding sequence, that's one of my requirements. I need to understand what your personal credit looks like. So I need to pre-audit that, and I need to look at your business credit.
Yeah.
And a lot of times your NAICS code, your NAICS code is a huge factor in how these banks view you, because a lot of people are in high risk industries and they don't realize it. So banks have what's called IRAM, industries requiring additional mitigation. And so I have what's called a non-IRAM list. There's about 800 industry codes that U.S. Bank and a lot of more banks are gravitating to. They lend the most to, because these are low risk industries. So these are some of the industries I'm advising clients, say, hey, if you want to start a business, you might want to look into these industries, because when it comes to lending and borrowing, it's a lot easier. Or I'm having them set up an additional like shelf company or shell company that they can specifically obtain lending from and then borrow from that company back to the operating company.
Very good.
Because it's easier, because you might be in a high risk industry that you operate daily in, but you can't borrow from. So if we help set up this non-IRAM industry, we can get the leverage here and then create the transaction between the two companies you control.
Wow. Another thing that comes across my desk often is clients, when they think about lending, the SBA, I don't know if they've been historically the most borrower friendly, but that is one that I'm always, having to evaluate as part of that conversation. So maybe speaking a little bit more to how the SBA lending matches up to what you're able to provide, and if you're starting to see a trend more now that the pandemic and a lot of those programs have shifted away.
Yeah. Well, obviously, the money was in the streets crazy after post-COVID. It was so, and I think we're experiencing a lot of that right now with inflation, because there was so much non-underwritten or light underwritten money because of the CARES Act. And so SBA is going to always be traditionally the cheapest money. It is one of the hardest requirements, but it is the cheapest money. So when there comes to business acquisition, I completely recommend it. Have used it for a couple clients to buy buildings. When it comes to working capital, if the books are good, it's a slam dunk. Now it can be a 30, 60, 90-day process, but you're not going to get cheaper money than the SBA, and the fact that it's guaranteed. Where I specialize or I help in filling the gaps is some of the alternative lending, the revenue based lending, the syndication funding, stuff like that. The fintech, financial technology, that's not looking at all the financials, all that data, but it's looking at, okay, you've been in business this many years, you're in this industry, you have this much revenue, we'll match that. I have lenders that will lend what's called a hybrid line of credit, literally just based off the money you have sitting in your business checking account. And they'll match that, for short to medium terms. But a lot of times it works for certain types of clients. They might not have good personal credit. They don't have business credit. Books aren't, they haven't come to see you to get their books together, but they do need 50 to 100 grand right now. and they have it in their bank account, or they have the revenue that's coming in. They just don't have all these other data factors or data points that can create the opportunities. And that's kind of where we step in and help create those opportunities, where your traditional U.S. Bank, Bank of America, Chases, they can't help them. So they usually reach out to me. I'm not taking the depository relationship away, but the deposits are still at the bank. I'm just helping them with a lending product that these traditional banks can't supply.
That's excellent. I have another question that relates to, what if someone already has a loan, say they've secured a loan for $100,000, and they realize that their capital needs are really $200,000? Do you see clients that need to first pay off that loan, or are you able to sit down and strategize with them?
It just varies. So usually most banks, anything over $50,000 in the form of a loan or a line of credit creates what's called a UCC-1 lien. If you took out a loan or a line of credit, it could be what's called an ABA, all business assets lien, or it could be a blanket lien, or it could be some other type of lien. So if you have 50 grand or 100 grand with Bank of America, and you've paid that down, your balance is 75,000, and you realize, oh shoot, I need more capital. So then that's where we got to get creative sometimes, because like real estate, a lot of banks don't like second position. So if there's a first lien position, UCC position on that business, depending on what it is. So if your first loan was equipment, and there's an equipment lien, ABA, all business assets lien, and now you're looking for working capital, then you're okay. A lot of people ran into the situation where they had the SBA EIDL loan that created a lien position, and then they were trying to get other loans, and so they had to get the SBA to subordinate. So a lot of times, if we do run into that, we can send in a lien release request or a subordination request, so the new lender can move in position. Or I've had this happen. Current client has a $25,000 outstanding balance on the loan. They're approved for a new $100,000 loan. This new lender wants to pay that off, so now they only end up with 75.
Right.
So
yes.
that's a more realistic scenario.
Yes, that first scenario was particular to what I was thinking about too. It's understanding that SBA EDIL,
EIDL.
And it's because, like you said, it's cheap money, and they're like, I don't want to pay off my SBA loan, right? Because we can keep that 30 years. And
exactly,
it's
30
very
years
low.
at
But it's great to know that there's even a process to where you can work with clients to actually come up with a solution.
Yeah, and honestly, I prefer working with someone that's looking at the client's books. Yeah. Because now I'm not trying to ask them information that they really don't know. I could just go straight to you, because you've already had the conversation. You already packaged it up. So now we just got to kind of cherry pick which product meets the need or solves the problem that they're currently having.
I enjoy that, because I oftentimes have to be the first person to let a client know your books may not be credit worthy, but they're at least in order. And it is really a lot of that comes from partnering with lenders like yourself. I work with a lot of real estate mortgage lenders also, and just understanding some of the things that help when it comes to depreciation, right? And how those will best suit the client. And then it's also a big opportunity for me to work with the client to really educate them on how to best use depreciation, so that they can continue to make sure that their loan package looks as best as it can. So
but again, like I'm real big on, if it's a startup, understanding, okay, you're pre-revenue, you don't have the data, you don't have tax returns, you do have a filed business, you're set up 3-6 months, but you do have good personal credit. There's a huge opportunity still for you. That's usually in the form of 0% business credit cards that don't report to your personal credit, that you can leverage, liquidate, and put back into the business. And then you have those businesses that are 1 to 2 years old that do have a little bit of revenue. They have some traction. They filed a tax return or two. That opens up other conversations. But then you do have those that are crushing it on the revenue, doing 7 figures a year, but have horrible credit. There's still opportunities because there's revenue there. So it's all about the data and the type of industry, again, and what's the end game? What are they trying to do? Are they trying to buy a building? Are they trying to buy another business? Are they trying to bring on staff? Are they trying to buy equipment? Do they just need liquid capital? It just varies.
Yeah, I appreciate that. Yeah, a lot of my clients, I have three clients that do online retail sales.
So e-commerce.
Yeah, e-commerce.
I have two lenders that specifically lend just to e-commerce businesses.
And they're in such a unique, state. Oftentimes they're buying inventory before the sales come in, and so there's always this timing game. So that's really good to know.
Well, I think that's it, y'all. So definitely stay tuned, stay tapped in with both of us. Access Capital, Mark.monetize me is my handle. So you'll be seeing more coming from us, having candid conversations with other business owners, other CEOs that solve problems, solve solutions, and create opportunities for our business owners out there. So peace.